next week is going to be the live trading session. I've thought about it. I think we will. So if some people are not level 8, we will record one live session. So maybe the one on Wednesday. So Tim's can be recorded and we can laugh at him. But at least the people that are not level 8 and above will be able to benefit from the call, but not all of them. So this is, again, me being too nice. And today is a call for you guys. I think that I've seen that yesterday night maybe 100+ charts on the technical chat. Today I participated a little bit and I noticed that some of the good habits are starting to disappear because we're getting into trading, and next week is going to be very important because we go back to work. So I'd like you guys to clear the chat for a minute, and whoever has a question, just raise the hand, okay? Or type in the chat, and I will answer one question at the time. Try to not ask two questions back to back, because we want to make sure that everybody has the chance to ask questions. So example, if Tim's, you have a question, ask me one. If at the end more people have questions, you can go back. So whoever has a question raises the hand, and you can ask the question in the chat or vocally. So let's go. Tim's, I'm gonna enable yourself. Let's go.
Okay, so I think AUDUSD is a perfect example of my question.
Do you want
So
to share your screen?
sure, let's do
Okay,
it. Let me
let
share
me
it one
just put you
second.
close.
Okay. Share and then AUDUSD. Perfecto. All right. Do you guys see my screen? Do you guys hear me
Yes,
okay?
yes, yes, I see, I see, I see.
Okay, perfect. So, yeah, obviously this was not a very good trade. So let me just go back to the beginning. So the way I see everything is kind of just an overview of the two main things that I see, which is structural expectations and liquidity, understanding liquidity at the same time, inducements and whatnot. So perhaps I'm actually going about this the wrong way because the way that I analyze, just in a nutshell, is like this. I look first for the structural, like I first identify structure kind of, and then I kind of cater to identifying the liquidity and seeing how we should react after the fact. So essentially, how I would see this, right? I know this is a little bit of a higher time frame idea, but the way I would honestly see it is just identifying structure like this. I'll see the decisional here, the extreme PY here. There's obviously liquidity here, whatnot. But this is like just for overall understanding. And then what do I see? I see this structure, I see this structure, and I see this structure. And I see us coming into this decisional. This is how I see intentions currently, right? And
Mm-hmm.
then what I'll do is I'll go to the M5, and then you see there's obviously this large structure with structural expectations, and then identify structure like this. Boom, 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 and maybe this, whatever. And then we have the F boss. Boom, 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 boom. I understand we have taken all these equal highs, but do I expect this to all of a sudden go down here? No, because of the overall expectations continuing up, whether it's this or retracement to continue up like this. This is how I see intentions currently. So is this the incorrect way to kind of blend structural expectations with understanding of liquidity, or is this a good start just with some
Okay, I understand the question. Good, good, good.
yeah.
Now, do you mind putting back that trade the Asia thing? It helps me.
Okay.
Asia indicator. It helps me. Invite only. Yeah, there you go. This one, the first one,
Yeah.
the first one.
Oh, the first one, yeah.
The new one will be fixed today or
Yeah, okay.
tomorrow. I don't know.
Cool.
Okay,
Uh,
so do you mind zooming out a little bit? Okay, just
mhm.
so we can see the zoom out. Don't have those sticky goddamn charts. Zoom out, stretch with the mouse, roll the mouse.
This.
No, so you have your mouse. Scroll down. There we go. Okay, scroll down again. Okay, now use this thing here on the right ruler. This one going down. I think it's
Oh,
gonna
right
be
here.
better. See, it's gonna be better that I draw because God, we're gonna be here for
Here?
all day. Let me share my screen. Okay,
Okay. That's
it's
fine.
gonna be faster because otherwise, if I go with all the questions, I'm
Yeah,
gonna
yeah, yeah.
kill
I
myself.
understand.
Okay,
I
so
understand.
you have your AUD USD. So let's erase all your chart. This is AUD USD. Okay.
Hmm.
So what I do is I go in M5, I zoom out, and I do this. Look like this. All right. Structural expectation has just created that first first new high. Because as you can see, we have this point here. Let me put it in red, right? We have this point here. 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 See, this is the external leg. This one here. This one makes a new high, right?
Hmm.
But this one fails this one. It makes a new high. But remember, it's still internal to this one, so the structural expectation potentially is still the same. Because look at the structural leg, right? Here we go. Here we go. Here we go. Until this one is taken, the price is bearish right now. Okay, so it's very important to understand the external and the internal leg. So this is the external leg, right? So
Yeah.
let's go together and let's mark up the internal one. Okay. So let's go here. Do you guys see my screen or is it too zoomed out or it's okay?
No, no, no. I see it. I
Okay, perfect.
personally
So,
see it.
okay, no, let's go here now. Let's go here. This one, right? Very clearly. Internal. This one also, right? This one also. See? See?
Hmm.
This one also, right?
Yeah,
This
that's
one
clear.
also, this one also, right? You can even mark up this one if you want, but it's not respecting this one. I shouldn't be marking it because it's not making a new low, but you can mark it if you
Mhm.
want. But the relevant structures are the ones I'm marking up right now. Okay, so this one is this. See? So it's pretty straightforward, right? If we
Yeah.
go back and draw the, we might have to correct some stuff if we go back and draw the internal structure. That's basically the same thing. I just didn't want to put another color on it, but as you can see, it's just to give you an idea. The complex structure is actually uh, in the same direction right now as of the overall trend. We have some internal structural shift, but the overall idea is still the same. So this is the identification you had to do prior to thinking about trading this day. This is the first thing to do. Okay. Structural expectation, we just confirmed it's bearish.
Yeah.
Let me
But
just,
can I say one
yeah,
thing
go for
before
it.
you continue? My only gripe about it is that yes, we understand that. Can you zoom out a little bit to see the last leg? So
You want me to go in at 15?
yeah, M15, please. So we understand that this is maybe the last external leg and whatnot. And then we understand we are bearish here, right? But here's how I identify it. Obviously, this is like our little decisional area. Why? Because this is the high that takes the low here. And the thing is, obviously, we're bearish overall, but isn't being bearish the whole time kind of just because like what if price decides to come up here, and then we try to take shorts, we try to take shorts here. I'm guessing this is where liquidity comes in and everything. But
Because let me just try to answer your question in on terms. So, example, this is the high, this
mhm,
is the low. So when you do that structural leg, God, I just would love to have like every single tool with every single. Okay, if you have that structural leg here, we don't know where this price will stop. So
exactly.
until this point is taken, the structural expectation is still bearish. So now you
Okay.
had this high, right? It made a new low and then it made a new high. But even if this is a new high of this structure, we're still currently bearish. And I'm sure
Mhm.
price will either dump here, continue, or react to something here and then start to reverse. But even if it reverses from here or here to go higher, we are still overall bearish.
So the idea is you don't target anything higher than this. You can
Exactly, but
target,
you
yeah.
can take buys if the intraday makes sense. So let's say the buys from here, if we go back here, as you can see, you have a clear inducement here. You have a retest of that POI. There's a trade here. and you target intraday expectation, right? See, this is the SMT reaction, perfectly reacted. This is the FBOS, right? Right?
Hmm.
Coming out of Asia, intentions are higher. The FBOS is only intentions wise because it's against the structural expectation, but intraday makes total sense. The speed and momentum enticing people to enter. And look how we have an SMT and target higher. There's even this is more my kind of traits, and it goes higher, right? But the overall idea is not to have a higher time frame expectation for a intraday play. So people doing this is a mistake. This is the first thing to look at, structural expectation, okay? You just had the wrong read. That's it.
Okay,
When it
gotcha.
comes down to intraday, you cannot ignore what the intraday does. Look at these equal highs. Look at this relevance of this push after this fourth touch. One, two, three. Remember, because we put that zone. I put the line because I can view it, but you put that zone. After that fourth touch, or even five, you can say one, two. That is a strong support zone. Why? It has been tapped for 20 plus hours. When they see this push, they enter here. It just makes total sense. Why? Because there's equal highs. Why? It's respecting the trend. Why? There's clear push to the downside. It makes total sense. What they do, they reverse on them with a six touch. One, two, three, four, five, six. This one is a little bit pulled by the hair, so let's say five. And look how they fake it. And this is your more complex trade. And here's your internal breakup structure, and that would be the trade I would take to target what? The next enticement zone to the downside.
And then since there is, and then since you know, one second, let me, oh, where did my drawing go? Oh, yeah, it's gone. So then let's say we take that enticement zone. We know there's liquidity below there. So we have, then let's
I
say
don't
that
see your drawing
price,
as a normal.
yeah, because I can't draw. I'm not
It,
able
it
to.
should be on the
Left side. Oh wait, never mind. It popped up for
okay,
a second. There's a bug.
no
One
problem.
second. Okay, yeah, it stopped again. Oh, this is so weird. Okay, zoom. Okay, let's say the target, the enticement zone that you target, right?
Yeah,
Point to it.
here.
Once that is taken, we know that there is relevant liquidity below there. So then if we start seeing an example of
For me, the only relevant
potentials,
liquidity here is here and here.
okay. And
This
then if
one,
we, because it has some,
no, because it has some clear breaks here, and I prefer those structured. This is a wick. Most likely, if we go on another indicator like here, so
mhm.
right now, if we go on another ticker, probably the wick wouldn't be there. So I don't like targeting those wicks when it comes
Okay,
down to liquidity. So
I got it.
I see your drawing now.
Okay, so then let's say that we start seeing upside here. Maybe you would take this, but you would only target this because we know that the structural expectation is still bearish, correct?
No, because imagine price could reverse from here, right? Example, I'm in
Mhm.
this trade, I'm already break even. But
Yeah,
price could reverse from that decisional zone we're here
hmm,
and go higher. But
which is why I
until
took that
it
trade.
takes this, until it takes this, you have no indication of that bullish price action switching. You took that trade, but you were trading against the liquidity. Understanding that you're in this short and price goes higher is okay. Entering to go higher is not what I'm saying, is understanding that it can go higher based on that decisional reaction. I would
Hmm.
never take a trade from there, especially with those equal lows taking. Especially
Okay,
equal highs, sorry.
I
This
got you.
is really like there's no like look at the PA. If you back in the day I used to reverse my charts because I was such a noob. Look at this. Do you want
Mhm.
to short or buy from here?
We'll
Buy.
buy, yeah.
So usually people are more optimistic than pessimistic, right?
I see, I see.
So you
Okay.
see, to switch is Alt I.
It really is like just about it really just is about like seeing it case by case, and then we
I think
understand. Yeah.
the main problem you had with this buy is you were trying to target and trade with the liquidity.
Yes,
But
yes,
we had,
exactly. It just makes sense.
if you never had that liquidity grab here, then your buy maybe would make more
I
sense.
mean, if you zoom out, I saw the decision was still higher, and my idea was we have all this crap up here. Why would we reverse down here? You know, because we have like, I guess,
But it's
what
not
I
really
saw
a
is this,
reverse
and then
because
I saw a decision.
remember, this
Mhm.
structure that you're talking about makes sense. But
Yeah.
we react to the liquidity that has been delivered to us, and this equal
You're
high
right. You're right.
provided a significant reaction. So immediately when I saw you guys buying from here, I sent you a little chart just so you see, because we don't expect this to be taken, even though it will be taken eventually. We want to trade away for now, and the valid trade away is here. You cannot argue it. Like, look
Hmm.
at the
Yeah.
push. Look how they come back. They fake again. If you want to take a buy, it's here. Otherwise, it's nothing. Then this, look how the price action is now developing to the downside. And it's late, and maybe the only target will be this. We don't know, but this buy was not valid. I
Okay.
hope that this helps, but
It does. Yeah,
it,
definitely get on the next question. We've been on this for a while, so.
yeah, but I mean, it goes to also. I think that your structural expectation um, were wrong in the beginning. Like I think that you had it wrong, and it made your market read wrong.
Mhm.
But at least it's better than before. I can tell you that. Okay,
Okay. For
so
sure.
let's go to the next question. I think it's Abby that has a question.
Okay, can you hear me okay?
Yeah. Okay. No, it's not the best quality mic, but I can still hear you. Let me just put you co-host,
I'm
and I'll
sorry,
stop
I
the.
need to get a better mic. I'm just using headphones, but
No problem.
I don't know if the best is for me to share my screen or for you to go to the dates.
Okay. I mean, I don't mind.
Okay,
What day
I
is
have it
this?
marked up. It's December 19th.
Of what pair?
Oh, sorry, Euro USD, my bad.
Euro USD, December 19. This.
Yes. So, a couple weeks ago, you kind of talked about taking. This was like a big aha moment, I guess, for me because, um, a lot of times previously I'd be like, oh, I'd enter too early. Oh, I was taking this liquidity. Oh, I'd enter and then I'd get taken out, and then I'd take more liquidity and I'd be like, oh, okay, here, this is where I enter, and then I get taken out, and then later price would go in my direction, whatever. So I would always say, oh, I'm good at direction, but I'm bad at entering. And you talked about waiting for price to kind of slow down and then get an entry. And I felt like this was a pretty good example. And I just wanted to, I feel like in a lot of examples now, I'm at the point where I'm saying, okay, like where would the entry be? Because I think once price finally broke down in this example at the beginning of New York, that's the point where you have to say, okay, this could be a real break of a relevant break of structure, but it could also be a false break of structure. And then in those early New York hours, as price starts to kind of slow down, I'm assuming that's where your valid entry would be. But I just wanted to kind of review that and see how you would
Okay.
interpret
Excellent.
things.
Excellent question. It's a little bit. It looks a little bit like a similar question than Tim's. So, and I think that this structural expectation thing that I started talking about, I was doubting that I should talk about it because maybe it would confuse it. And it's one of my way to view the market, but I think it's good because it helps a lot of people. I think that let's say that you see the price, right? Price is doing this, right?
Mm-hmm.
As of now, price is still bearish. You confirm,
Right.
right?
Yep.
But since we don't have any anchors, you see here, we only have this thing here, this
Right.
decisional zone here. The only place that we could have a reaction would be here or maybe here, right?
Exactly.
We don't know if price will go higher from where.
Yeah.
So this is where if you want to take shorts, and that's what you should be doing, you need to wait for at least some price action reversal behavior. If we
Yes.
go here, the first break low would be this one,
Yep.
right?
That's what I marked.
This one also is one, and
Yep.
this one is also one, and most likely is the final one. Okay.
Uh-huh.
I think when it comes back to this day, the only problem, okay, is when price pushes here down, we react to this liquidity here,
Yes.
and price makes a new high,
Yeah. So that's the
right?
area I was gonna say you'd probably assume, okay, this could be the F boss
Yeah.
or it could be the relevant, but like, yeah, we want to wait.
Excellent question. So let me just change the PA and give you a perspective of why I wouldn't take this and
Okay,
when I would. So
sure.
imagine pre-A here would not be doing this structure like this. Imagine it would be like a straight push, and the structure would be here, and price would
Okay.
react and go here. This is where I would be interested in shorting from here because we didn't had that reaction to the left. If we have a relevant break of structure that has liquidity to the left, most likely we will have a kind of a mini trade away. And usually I would sit on my hands. But imagine this is not here. I would take this 10 out of 10
Okay, that makes
because
sense.
this actually, so let me give you another example, even a better example. So you have, let's say, equal lows, right? Now price does this, and there's also, let's say, no, this is a bad example. This is a bad example. Let me give you a better example. So we have previous day high, right? Let me just do this like this. Like this. Okay. So we have previous day high inducement.
Uh-huh.
You agree that this would be the internal false break of structure.
Yeah.
Just because there's these, let's say, mini equal lows here, I would not take this short.
Mm-hmm.
If price would do this, now I would take this short. At the moment when there's liquidity taken and there's a reaction, most likely there's a mini trade away, and it indicates maybe that price will do higher. But also, this can go in two facts: is people could see this that this like this, right? Price doesn't do those equal lows; it just retests that PY immediately, right? And then there's equal lows targeting here. This is another situation where I would take it, right? Because you could have those equal lows to target and the other liquidity. The
Okay.
relevant break of structure, and if it has liquidity, try to stay away from it because most likely it will do a high, right? But
Yeah,
if
that
you
makes
see it
sense.
that way, we are still in the demand zone with the overall POI. So if you would enter here and put your stop loss above, you would have sweaty hands for like what, two
Yeah.
hours, but it would still be valid. And I think that this is where I need you guys to practice is try entering trades with bigger stop losses instead of going so precisely. And if you're still in the overall zone, so let's say this would be the first break low, right? This would be the second break low, but we have
Mm-hmm.
reaction to this liquidity. You could still enter with having all this as a stop loss.
Right.
It would still be valid. It would be a fat stop loss, but
Yes.
remember your goal is to look at the risk to reward. So example, you decide to do this, like this, like this. This is a 1 to 7. It's very, very good, right? And you still in. So when it
Yeah.
comes down to having that patience to wait, it's going to be very hard in this situation because you don't have nothing to anchor yourself on as the opposite of AUD USD. Look how slow it is because we're already like so late in the day,
Yeah.
post New York Eve, nobody's in the market. But look at the anchor we have. Look at the intentions we have. This is very, very clear and a very, very easy trade to take. But
Yeah.
the
That makes
Euro
sense.
USD, no. The Euro USD one is very, very New York Eve. Sorry, New Year's Eve. I said New York Eve. When it comes down to your Euro USD, like if you really doubt with these days, just stay away from it. It's just nicer to have like real intentions of proper PA. Because
Yeah.
even though post, if you would do your hindsight markup, this makes sense. But
Yeah,
if
that's in hindsight, it was like, oh yeah, that's clear. And I think it was
but
easy to say,
would
oh
you
yeah, I
have
would
the
have taken
patience?
this sell, but
Yeah.
exactly.
But will you have the patience to wait for 3 hours? I doubt, and I don't think that this is a good day. But the only thing you need to remember is doesn't matter where we are here or goes here or even here, that structure, we're still bearish because we haven't made the new high here. So
Yeah.
this is the trade away. A trade away is either liquidity grab or the structural expectation. So it's pretty simple that here we're trading away, and we're going the same direction. It's just regular to have that uh, same direction than the structural expectation. Sometimes when there's a high or a low, there's not always a trade away because the liquidity hasn't been taken, but usually internally, so let's say here, this is a high, right? This is a trade away, but it's also the high. So,
Okay.
uh,
That's
uh,
helpful.
all right. So I hope that helps. If there's
Yes,
anything,
thank you.
all right. Who's the next in line? Can you tell me, Miho, who is the next person that has raised the hand? I cannot see my chat anymore. Cian's trade. Let's go.
Hello, my name is Sebastian. It's okay.
Sebastian, let's go.
Um, can be some kind of repetitive question, but I'm trying to understand more about expectations because sometimes I see the expectations have act as a function of intraday liquidity, but other days can be the otherwise. Intraday liquidity as a function of expectations, because, for example, today we have a very expectation is very simple, but we have our external high, our external low, and inside that kind of range is like a playground for intraday. So, which one weight more?
So me personally, I think that the structural expectation was me giving you kind of, let's say, my dad never uses a GPS. Never, never, never. He doesn't like GPS. He just uses the indication on the highway, right? For me, I don't use a GPS also in trading because I focus on intraday only. The higher time frame expectation and the structural expectation I showed you was basically to help you position yourself in the market so you're not against the overall structure. Okay. For me personally, I think that intraday is everything you need. And I think that intraday weights more because usually in the intraday play, you can have bold trades in both direction, right? And if you would focus only on structural expectation, you would ignore this beautiful buy on AUD or this beautiful buy also because you would expect price to go lower. So I think that use the structural expectation before your day and like maybe in the middle of your day if you're losing track of your destination. But otherwise, just focus on intraday liquidity. This is what drives the price. Remember, there's a lot of people that don't understand that the candles, one candle between like H1 or M1 don't weight more in terms of the market. What they see is the price tick. The candle is a visual representation of the current price history. So as we can see, that M5 candle closed above. Now it's pushing to go lower or maybe close above. When the market itself behind the blueprint, uh, they just have price ticks here. Like on your MT4, they don't have candles. The proof is you can switch to line, right? The only thing they see is the price. The candles are there for us, nobody else. So I think that for your question, focus on intraday liquidity and use the expectation before your day, midday, and like end of day. The only way I use the structural expectation is to actually know how the next day will look like. That's it. If I know that we're between two ranges, I'm just gonna say, yeah, fuck off. I'm not gonna trade this day, right? I hope that answered your questions.
Yeah, a lot. So can be logical, like think the most current or the most important liquidity will be only in this day because almost all the transactions are done in one single day, right?
No, because remember, we are not all intraday traders. There's more swing traders than intraday traders. I don't know if you know, because what they want is liquidity. Usually intraday liquidity is liquidated on the same day. So the first retail strategy I used was holding trades for 1, 2 weeks. I don't look too much to the left, but I think that anything before like previous day is usually very relevant when it comes down to reaction and when it comes down to understanding personally. But again, this is personal. You will find your groove. Some people here in the Discord don't even use the structural expectation. They just use a retail strategy. You will find whatever works for you. I'm just here giving you each tools I have and I have used, like the reverse trading technique. I don't see nobody using it, right? I haven't seen a lot of people talking about it, but I use this every single day. If I miss a trade, the actual reverse trading technique is what keeps me out of traps, right? So if all the tools I give you, you use the one that you need and that you like, maybe try another one or stick to them. I hope that helps.
Thank you.
All right. So has Andres.
Hello, Rod.
Hello, is there a fucking trade in here? Are we taking a trade or what?
Yeah. Can, can
Mhm.
can we go to EU, or do you want that I share my screen, or do you
You
prefer
can
to
share your
see?
screen, or I can go to EU, whatever you want. I don't mind.
Okay, let me share. I have everything marked up
Okay,
here.
let me just start the sharing. Let me just give you the right to share, and let's go.
All right. Are you watching the screen now?
Yeah, I see it.
Okay, perfect. I got a question. It's actually very related and a PA very similar of what I think it was Avi that asked, because in the hard time frame we could notice that obviously we're in a downtrend, but
Hmm.
we are right now in the middle of nowhere. But
Yeah.
for today price action, okay, we could
Hmm.
notice a clear sequence of higher highs and higher lows.
Yeah.
But for example, here, I mean, I know that we are trading against or into the liquidity in no way. But in this case, is it possible that we could consider to take in shorts based on the stacking of some orders here, or it could be kind of risky
Uh,
because
so you mean taking shorts from here? Can you zoom out? This is what pair is this? Euro USD. Let me just open the
EU,
chart.
yeah.
Okay. So this is basically a little bit the same PA that Abby showed us, right? Um, the only problem, let me just see the trade It was the 19. Keep your chart like this. Let me just go back on the 19 so I can compare. It was the 19 of October of December. 19 of 19 of December. Yeah, exactly. Okay, perfect. So the only thing that happens that is very different from where Abby showed us is that you have only broken the structures from here. For it to be a relevant break of structure, it should be this one, right? Because this is the push that led to this high. Right now, it's just trending here. I would never, I mean, never, even if you would put a gun on my head, I would never take a trade from there.
Okay.
Never, never, never. Because zoom out of the day, right? And this is a practice you should do. Just look at this, okay? Look at this. Don't look to the left. Just look at this. Is this an inducement? Yes or no?
Yes.
Okay, so you can clearly see an induce. All right, perfect. This is good. Here, is this an inducement? Yes or no? This
Which
one,
one?
this one here. This
I
hasn't taken any liquidity. Yes or no?
no.
So it's not
No.
an inducement, it's an enticement. So this is why the current trade away is still the same one. Here, 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 and from this one. Does that make sense?
Yeah. Yeah.
I would never take this. And this is a really good question and a really good example, but it's actually I just seen the other chart. It's very, very different because remember, she had like those liquidity here, price went fast here, went higher, and then it started giving. That was a relevant break of structure, even though I made a new high, taking that liquidity, it's not the same PA.
Okay.
But
Perfect.
these are like these days, you know what I do? I press on the X here. That's what I do. Because there's no point, right? You look at the volume. We are past New York Open. We are 15 minutes in the stock market open, right? It, like if you would see Nasdaq, I don't even know if Nasdaq has moved,
Yeah.
but hasn't moved. Nasdaq. Look at the push, and there's no volume in. This is often something you need to check. We know that. Let's talk in UTC plus one, right? Because I trade in UTC plus one and not in Eastern time. New York Open is 8 a.m. for Eastern, okay? So when it comes down to you guys, it's 14:00, right? Eastern UTC plus one.
Yeah.
The stock market opens at 9:30 Eastern time. So it means that at 15 for you guys, it's the stock market open. Look at this goddamn volume. If Euro USD doesn't push, doesn't move, switch the goddamn pair. Go do something else. But I would never, never in a million years take a short from there, even though it reacts. Like especially, and you guys are you're gonna see this next week. It's gonna be my first trading day, the first week of trading, and the first day of the year. It's probably gonna take me one or 2 days before I take a trade because I'm not gonna lose money to stupid volume, right? If Monday morning, it's perfect, fine. But as of now, what I'm seeing this week, yeah. I hope that
All right.
helps.
Thank you. Thank you, sir.
All right. Let's go. Who do we have in line for them questions? And remember, these questions are for you to be ready for next week. So don't hesitate if you have like live trading questions. Hassan, you can unmute yourself. So tell me what you want to do.
Can you hear me now?
I can hear you.
Yeah, first of all, thanks for everything you did for us.
No problem.
My question is, when I take stop loss, okay,
Mhm.
you said you must wait for at least 1 hour to avoid over trading, FOMO, anything. Okay, but my question is, when we take stop loss
Mhm.
and still the whole idea is valid,
Yeah.
can we re-entry again? And if your answer is yes, how many tries?
I
On
mean,
your
if for me, if let's say I take a stop loss, right?
yeah,
As if some of you don't know, I take multiple stop loss per week, uh, because I want to have too much refined entry. So let's say I take a stop loss as on a valid setup. But the only mistake I've done was that I had a too much refined stop loss, then I would enter again because the idea is still valid and the entry is still valid. It's just my entry was too over refined. Okay, so this is my answer. To develop on that answer, let's say that you have a valid trade, a valid idea, you enter a trade with a proper stop loss and you get an SL, then this is a different reason. This is a different concept, and you should not be re entering in those places. And if you want, re enter one last time. The best thing to do when you hit a stop loss is to reflect on that stop loss. If you're not able to reflect on it, it's probably because you don't understand why you have lost that trade. Remember, every single mistake I do, I need to be able to justify them. If you can justify them, most likely the mistake doesn't come from the overall trade, but the overall understanding. So there's no limit of the amount of trades that you can take. Just be diligent on why you're re-entering those trades. And it will come with experience also.
yeah,
And my answer is based on zero emotion, right? If you have zero emotion, you're purely a professional, you're not emotional, fine. But if it's how many trades you can take based on emotion, the answer is zero.
yeah. I don't mean emotions. I mean, you don't.
Validation. I think one time is good. One time is good,
Yeah,
but not
yeah,
immediately. Like take a couple of seconds, take a couple of minutes to like recheck the chart, recheck what happened, right? See where's your mistake. Is your mistake just because of your stop loss? Is your mistake because of the spread? Is your mistake because you got slipped? Is your mistake done because you had news? Every single mistake will tell you if you're allowed to enter again or no.
thanks, Mr. Roth. Thanks.
No problem. Who's next in the questions? AVP trades.
Hi, Rod. I thought I'd ask by
You want to share your screen or you want me to share mine?
You can share it. It was just the EU one.
Okay, so let's go. So I can share my screen. Okay, give me a minute. Give me a minute.
No.
Can you see my screen? Oh, AUD, baby. What's wrong? That's wrong. Doing good. All right. All right. EU. So today, EU. Let me just here. God. Here we go. Oh,
Perfect.
there's
Yeah.
news. What's the news? PMI. My God, that's gonna be some solid move.
Hopefully with my bias. I don't know if I was kind of forcing the I guess the vision. Let me just quickly annotate.
I'll zoom in for you. Here we go.
Thank you. There we go. I saw this. Just let me know. Yeah. I saw this FBOS
Mm-hmm.
kind of massive trade away that we had from the previous day, and
Mm-hmm.
I saw again. Let me know if I'm looking way too deeply into it or it's not clear enough. But I saw a form of equal highs and an IF boss into the mitigation, and then a continuation on. Yeah, don't know if that's valid or
So I let me just erase your stuff so I can draw mine.
isn't the cleanest.
I think that if you view this as a F boss, I think it's not so bad. I think it's okay. It's if it helps you. So this means this becomes the inducement PY, right?
That's right. And
So
then I
it
saw,
comes back.
yeah,
This is not equal highs. This is
sure.
the relevant break of structure. and this is a mitigation of that extreme POI to go higher.
Okay. Yeah,
So
I meant
that's not equal highs.
okay.
It's most likely a relevant break of structure. Remember, equal highs are really the example like, come on, please. Look at this. I mean, I'm excited for Monday. So as you can see here, this is clear equal highs. You have no doubts of those reactions. Look, boom, 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 boom. It's like if you were to count this as equal highs. Usually, you have to have logical equal highs that are also making sense in the direction of the market, right? So as you can see, these here, these relevant equal lows, inducing low, there's no enticement, so it's relative, so it's not relevant, it's relative. Sorry, I made a mistake. As you can see, they don't make a new high, but it makes sense to have these low support, inducing low, and trading away, right? This goes against the overall play of the day. So your idea is completely right until you said equal highs.
Yeah,
Um,
perfect.
baby were crying when you said that.
Yeah, sorry about that, guys. Well, how about the F boss into the actual mitigation? So
I think that if you view this as an F boss and this into a mitigation, I think you are right. I just don't like really that this F boss really it's an inducement low. You can say that it's an F boss, but it's saying that it's an F boss or inducing low, that structure that induced people to go out of Asia makes the same thing. It's basically exactly the same thing. But yes, you can say that this is an F boss. It goes here. If you take this trade, perfect. I just think it's a little bit big, but it's completely right.
yeah, sorry, I
And
meant
your idea also of your trade away here is perfect.
thank you. I meant this part as well. This IF boss. I'm just trying to add stat confluence as to why. So again, I saw this as the IF boss into the mitigation to kind of add to the tally of confluences.
You can, but what does they just induce people to take shorts?
Sure. Okay.
So they would induce again? You can if it helps you, but for me, it doesn't bring. Remember, liquidity markup means value. If there's no value, why marking it up and just putting more? I'm gonna be honest, I don't even see this wick. Like this wick doesn't do nothing for me. This one, like this has like some solid intentions and boom. But then it would be like boom again, right? Let's try to identify from left to right, and I don't think that this is relevant. But what I've seen from based on your question is your overall understanding is good.
Yeah, I think my mind's quite mechanical, so engineering background. It's just I'm trying to add loads of confluences to say, yep, this trade was valid, so win or loss.
Remember, more doesn't mean better, right?
I'm seeing that now.
Yeah, I think that if you view my charts, I barely like I barely have two lines, three lines, because your goal is to anchor your brain into the relevant thing. And as of here, the most relevant thing is this, right? And maybe this one is very relevant because it pushed to the new high, and even this one, right?
Yeah,
These make significant liquidity zones, but other than that, I wouldn't mark everything here because it doesn't bring anything into my vision. It's most likely just going to be lower. As you can see, those equal highs here add so much value. Why would I start putting lines here, here, here? And this is why I always advise you guys, have a chart from intentions. This is for my private mentoring, but have a chart for every single stuff. So one chart for your liquidity markup and one chart for your trading. So FX2 is my trading chart, and you notice I always do this. Look, I have two drawings. Here I have 15. I do this every single morning. I erase everything. I like
yeah.
my thing clean. But this is me, right? But I have, based on what I've seen, good understanding. Maybe a little bit less F bosses back to back.
Thank you.
All right. So who's the next victim?
Let
Uh,
Sango go first.
Okay, so Sango, let's go.
Hey, it's actually, hey Rod, how are you?
Yo,
Good?
I'm good. You? Thank you. Thank you.
Ça va très bien.
Good.
I actually have a question on that chart because I was looking at,
You?
yeah, just
Okay.
there. Here's a trade I would have taken, which is the one that, so basically at Frankfurt, so at 8:22, I think you have the same, yeah, UDC plus one. So basically, the way I would have seen this is, oh, can I
You
actually
can
share my
annotate. Yeah, you can share your screen. Let me just give you co-host. Let's go and let me stop sharing.
Can you see my screen?
Yeah.
Okay, so the trade I would have taken is this one, but I will say why this is legit for me. So, so first of all, we have literally nothing after we break Asia with kind of speed, momentum, blah, blah, blah. We have nothing to the left to react from. This is not relevant for me. And even the top here is not relevant at all. And what I like with this price action is we took actually the low here. Wait, this is supposed to be this, that's a big Asia high. So for me, we have this. I like the fact, I mean, I like the fact that we took this AKA liquidity, and that's why I was considering this trade here. If we didn't took the that low that created this high, so let's say this week wouldn't be here, I would never buy from here. But for me, the liquidity that taking the Asian high was taken here, therefore this gives some legitimacy. And then I went on 1 minute because this is way too big. Boom. And I use a buy stop, to be honest, to get this. That was there. I mean, 1 to 5 minimum. But yeah, that was the way I was seeing it. And
Yeah, it's pretty good. The only thing with these types of trades is this here having this without like having since this stop loss. Let's say this is more of my type of trades, but the problem is where do you gauge your stop losses? It's like usually I would take like this, like that continuation. And this is something I do is again, if this is the first trade of the day or not will depend. Let's say that this is your first trade of the day. If it's not, then this is okay. But if this is your first trade of the day, you need a mitigation. And I think that this is okay. I just think it's a little bit risky because
this will never be the first trade of the day.
yeah,
And to be honest, this is only if I'm already up during the day. Like the only reason I will have take this trade is because I took the short from yesterday. That's it.
yeah,
From
that's perfect. I mean, if it was your first trade of the day, and I think that this is a little bit more advanced, but this here is the inducement POI. The best way to take it is to take the whole SL, but if you want to take this, it's completely okay.
yeah, but that gives me too big SL give me headache. I know that is the RR account, but I prefer not taking this than I would rather. I mean, if I had to cover the low like this, I would rather not to take this, wait for the next break, and try to find anything in
Yeah,
here.
this is unfortunate that this would be my I would hit a stop loss here. So it's a little bit too late, so I wouldn't trade at this time. But see that this is a type of trade that I would take, right? Because we don't have nothing to the left here, right? That would be just a continuation, and I would most likely hit an SL maybe here, or depends if I had luck to take the trade after. But for me, this would be the mitigation of that decisional zone, and I would want to take this. But I cannot ignore the imbalance here, and maybe I'm rusty, but I cannot confirm if I would take this one or no. But I think because of the imbalance, maybe I would wait until this is taken.
Yeah,
But most likely this is where I would get involved. This I don't think so.
yeah, I will definitely waste like Yeah, I won't be able to take this one. I would have waited for something like that and then a mitigation on the 1 minute.
But yeah, it's a good thought process. It's basically similar to what the I think Sebastian or AVP said just before. So I think that it's a good thought process.
Yeah, it's just there's I think it's G Cole or you that mentioned that the low that take Asian high is probably that where the whatever liquidity is if you want
But
to
it's
take.
always because the breakout use Asia as break. So maybe both of us, because every single structure that breaks Asia is relevant because the break and retest of Asia high or the breakout of Asia high is relevant because it's a retail strategy. When I was trading breakout, I had an EA that was constantly buying automatically out of Asia session.
How did that EA perform?
Oh, like 90% of them. I think I had maybe 2 or 3 EAs that were doing good. Like back in the day, I had the Sufyan and Manolo look at EAs while I was asleep. It was one of the best times of my trading career. We were waking up in the morning printing money. It was a good time. I miss
I
those
need
times.
I need I need a
All right.
Sofyan too. I need a
Yeah.
Sofyan too.
All right. Thank you,
Thank you.
Sango. I appreciate it. Let me just take a minute, 25 seconds, just 25 seconds. I don't want to blow my own horn, but that's I hope that somebody took that trade that I just identified earlier. Here, a little thingy here. Can I know if somebody took it, please? So I can request my profits. I'm in, I'm in. Unfortunately, no. Okay. So does that AUD/USD make sense now? Does it make sense? Yes or no, based on what we discussed, right? Remember, when there's relevant liquidity taken, there's always opportunities to enter. We missed this one. If I had money into my account, I would have slammed this bad boy. But at the end of the year, I just empty all my accounts, put it back to my bank. I'm sending money today. We're starting with 50K on every single one of my accounts, and we'll grow from there. So Monday morning, I'm ready. I'm ready, ready, ready. So as you can see, we liquidated, we reacted out of this decisional zone, right? Why? This is a proper SMT. Remember, an SMT comes into the two, let's say maybe 3 kind of flavors. Okay, we have, let's say we have a proper trend. We have a structural shift, SMT going higher. So this is a good SMT, right? That would be what we call a intention SMT because we have that proper FBOS, right? Everybody knows this one pretty clear, right? Here we go, like this. Let's say FBOS, okay? But we also have like this one, right? That we have so we have the liquidity here being liquidated, right? But day, as of day, when I say day, the actual retail, they use the structural highs as a relevant break of structure. This is an inducement, but also a retail BOS. So their SMT is in the opposite direction of your inducement trade away. So this SMT doesn't provide any value if there's no reaction. In this case, we had a lovely reaction, right? Here, came back into this POI, and that would be my trade, right? This is an intention to buy, right? Remember, this is the false reaction I constantly talk about. If the price does this goes fast and goes higher, most likely if we're trading away from this liquidity, this is an SMT. So this is another way to identify SMT. Okay, let's go in another way to identify SMT. Again, let's say we have this. This is even easier, right? So we have an SMT residing, taking a little coffee. Do we have a coffee emoji? Let's like this one. Above or below clear liquidity. Okay, so that would be the tree way that I think would be relevant for you to mark up SMTs. I see a lot of people marking up too many SMTs. That's a mistake. In the future, in future videos, I will show you how to trade the SMT. As of now, that's a little bit more advanced. So let's be patient and let's not do it right now, but in the future, I'll show you exactly how to trade the S&T. And it's normal for the price to react, release that liquidity. Maybe they're mitigating that decisional slash extreme if you exclude that wick. Doesn't matter. When you're in this trade, let's say you would enter this bad boy here and you would target this low. Let's say this is 128. Take your partial at 125 at this imbalance fill or this POI here that has that reaction and call it a day, right? Remember, nobody got poor taking partials. Now we came back, fill this imbalance, most likely will go to the flow. But I'm happy. I will request some profit splits from your trades. So I'll send in um, you can send the PayPal to this email, please. And let's go to the next question. Hey, my son. Since Tim's and Andres already asked a question, so let's go to hey, my son. Can you unmute yourself?
Yo, Rod, can you hear me?
Yes, I can.
Can I share my screen?
Yeah, Solana. I accept Solana Solana coins also. I need my meme coins. So if you want to send me Solana, I have no problem with that.
I know that.
All right.
Do you see my screen?
It's okay. It's there. Yeah. So
All
same
right,
trade. A lot of people have a lot of things to say about.
Now the question is about the candle closure and readjusting the stop loss of it.
Yeah.
This is my markup. It was the same as Andres and from Sango.
Yeah.
But my question was, since I watched the video of the candle closure, the rule number one is never to enter a trade when price hits the mitigation
Yes.
point.
Yes.
This was my trade style way before, but now I would take the trade here at this point. So the first candle closed above this candle, the second and the third here. So this would be my confirmation to take the trade right there. And the question is now, should I adjust my stop loss to this point, or should I keep it the same way at the range of this mitigation?
It's a little bit tricky question. Let me just draw on your screen if you don't mind. All right.
Yeah, sure.
Can we remove that buy sell position so I can have a little bit? Okay. So see, price goes here, right? Candle closes below in that PY. The next one closes it. When we go into that PY, there's the three candle formula always, right? So we go in there. The next one goes higher, right? Then the candle stop. Now we start. The candle, there's a reaction. This one closes below one candle. This one closes above below one candle. This closes below one candle. Then this one closes above. That's the third candle. Most likely you could enter here, especially because of that decisional zone with that imbalance feel. But I'm telling you, these trades are way too advanced. This is very, very advanced and very, very risky. Like, if you're not up for the day, don't take this. But for me, I would potentially enter on that candle, like here.
All right.
But do you have the 30 seconds?
Yes.
Can we go check, please?
Yeah, that's
See,
that's
yeah,
why
yeah.
I asked the
No,
question.
this I would enter here. I would enter on this one.
Okay.
Look how it pushes the lower here,
Yeah.
gives you that retracement. I would enter here,
Mm-hmm.
but this is way too advanced. I understand why you guys are looking at this because today is shit, but this is really advanced, like really advanced.
And
People that are in AUD USD, for God's sake, please take some partials with the speed and the momentum. Please take some partials, even if it's $2. Okay, let's continue. Sorry.
but how would you adjust the stop loss at this point?
I would put in like on that wick because remember when the price is leaving, most likely
Uh-huh.
this here is the reaction to this PY. If it goes
Okay.
lower with this fat guy, you're still valid. Then
Mm-hmm.
if you hit the stop loss because you have a sell here, then hit yourself on on your hand and just take the trade with the big stop loss, right? First be greedy,
All right.
then be more like less aggressive.
All right. Got it. Thank you, Rob.
No problem. I hope people took partials when I said speed and momentum and decisional POI. We need to take partials. I know when I say you guys are pro, it's just that I don't want people to get too much into advanced entries because they're gonna hit too much stop losses for breakfast. All right, so next question, El Pecho. El Pecho.
Hey, bro. How are you?
I'm doing fine, and you?
Good, good. Can you hear me good?
Yeah, I can hear you.
Can I share my screen, please?
No problem. Let me just allow you to share your screen.
Thank you very much.
Let's go.
Okay, so that's here. Okay, can you see here?
Yeah. Then we'll do more like maybe 15 minutes more. Then I have to leave. I have so much things to do, and we're already 1 hour more in the call. Let's go.
Thank you. So here I was doing my homework. So
Mm-hmm.
that's from September. So we have a bullish overall direction here. I have marked my pawns here. So my question was about these trades here. We took the previous daily high. We
Yeah.
had that's SMT, so we have liquidity above this high. So,
September. God damn it. You do your homework far away.
but that's what you recommend to do if.
I know. It's just it's
So I took
my memory is pretty bad because I don't remember this day. But it's yeah, it's in September. It's in London. Let's continue.
So we have that inducement peer high. We have here faking equal highs with the previous daily high. And I took my entry based on this. So I took the whole POI on 5 minutes, then went on the 1 minute, waiting for that candle close here.
No, I don't see nothing wrong with this trade. What is your question?
But basically was based on here we have the reaction in this SMT. So if I was in live, I would take BE. And my question is,
Why would you take BE here? You have you watched the target video? What is the first indication when you enter a trade? What should you indicate? M1, M2, M3. What is
yeah.
your M1 here?
So my M1 was here.
Okay. What is your M2?
M2 was on the 5 minutes. So I have this liquidity here,
Okay.
and also this one here.
Okay.
But we have the reaction of the SMT. And my question was, would be valid to take a re-entry here?
Valid, yes. Would you take it? Why? Because I really think that you need to anchor in your head the same thing I just said for AUD USD. When there's speed and momentum into a POI, decisional POI, partials needs to be taken. So if you see properly, you had speed, you had
Yeah.
momentum. Let's go in M1. Okay. Look how the candle here, right?
Yeah.
Look look at the reaction. It doesn't break in retest, so most likely it's not going lower. I would take my partials here. Can you go in M5 and zoom out, please? Or maybe M15?
I'm 15.
Okay. Go in M15.
I'm on M15.
Okay. Zoom out, zoom out, zoom out. Again, I want to see all the days. I want to see the structural expectation. Yeah, it's see like this, 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 this. So most likely, can you see if price and like as of now, I still have bullish intention. Go back on M1
Yeah, that's what I had in mind. So like my last target was
because you understand that you're doing the opposite, right? We are in a bearish momentum.
I-
You're trying to target not the next enticement zone. You're trying to target what? Can I know? On the left.
uh,
Go on M5 if you want.
so here it was the last target I have in mind.
Yeah. Do you think
Liquidity.
that this target is really, really good?
Like it was the BO because here it's
Go on
supposed to
M5. Go on
be
M5 so I can zoom out.
okay. M5 here.
So this target is a little bit too much optimistic, in my opinion. Like
Okay.
the maximum target I would take would be Asia low, in my opinion.
Okay.
Right? That would be Asia low. But the problem is it doesn't mean it will take Asia low. You have to adjust. Here, if you take a BE, that's a mistake. You need to monitor your price. Look at the speed, look at the momentum into that PY. This is the PY that led to the initial push, right? This
Okay.
is also the real Asia low. When you see here, after it's not the real Asia low. But this has significant reaction. Even though it does this and you hit that BE, you have to take partials here. Like you have more than 10 minutes to take partials.
And you have take like 80% at this time?
Depends. Like, is it your first trade of the day?
No, no.
So then take 50%. If it's your first trade of the day, take 50. If it's your first trade of the day, take 80. Right?
Okay.
Cool. Let's go.
Thank you
So
very much.
no problem, no problem. I will take two other questions, Tim's and Andres, and then we'll stop because I went over the time and I have a busy day. But let's take a minute. This AUD trade, god damn it. Come on. Like look at this. It's nasty. This is like disgusting. I'm kind of FOMOing right now. And let's go and check the EU Mr. Andres was talking about. Let's see if this is an inducement. As you can see here, this candle, what does it do? Do we just mitigate this on here? This imbalance? Oh no, I already touched it. Yeah, I already touched it. So this is completely irrelevant. So for me, EU is pretty. We would use AUD as compass to take this EU trade. Even that, like this is completely nasty. Yeah. Tim's. Let's go and then we'll go with Andres and then we'll call it a day.
Okay, perfect. Okay, I think I can share my screen now because it looks
Yeah.
better.
Okay. Let me
Um,
just. I think you already have co-host actually.
yeah. This not okay. This should be good. Yeah. Okay, here we go. All right. Do you see it? Do you see my screen?
Yes.
Okay. Not this. So you mentioned that tradeaways are not just from like relevant liquidity, Did you mention that tradeaways are also
Can
from
also
structure
can also
also be structural
not
expectations?
always like I explained to Abby, tradeaways can also be a structural expectation that has a tradeaway. So let me just show you a drawing. You
Oh,
don't
a
need
structural
to.
expectation that does have a tradeaway,
So
or
let me
a
just
structural
draw it. So
expectation?
example, you have this leg.
Yeah. Wait. I
Okay,
cannot see my thing.
you see it.
Yes, I do.
Okay, right. You have this point here. Imagine this is the structural leg, right? You see
Mhm.
it.
Yes.
And internally, we have this. And this would be like, this would be a previous day.
Hmm.
That previous day is taken by that structural expectation high. So it's
Yes.
now also a tradeaway. So the tradeaway and the structural expectation high is the same, but it doesn't happen in all the cases, but it can. And when it
Oh.
happens, it's nicer. Let's go in M15 and then
So
we'll check.
so basically what you're saying is a tradeaway can be a structural expectation high or low,
Exactly.
and not every structural expectation high or
We
low
had
is
the
a
perfect
tradeaway.
example AUD USD. Go AUD USD today. Yeah. M15. You have too much shit on your chart. M5. It's better. It's better.
Let me just clear all this shit out.
Okay. So you can remove the ticker for a minute and put the yeah. No, remove remove them. Here we go. Here we go. Here we go. Perfect.
What? Oh, okay. It's fine. What I will do instead is I'll just put
Put
this.
the old one. Yeah. All right. Perfect. Zoom out. Zoom out so I can see. Okay. So we discuss that this is the high, this is the low. Everything
Yes.
in between is internal, right?
Hmm.
This now is the new, will be the new confirmed high once we make a new low.
Yes.
This took internal
Yesterday's
liquidity.
high. Yes. It took yesterday's high, which happened to
So
be equal
this
highs.
is the structural leg and also the tradeaway. This is a perfect example. But
Okay.
when you do this, you have to predict it. You cannot confirm that this is a high with a tradeaway until this is taken, right?
Okay. But this would still be. But would this be the tradeaway that we're trading away from now?
Yes,
Because
yes.
okay.
And this right now is currently the confirmed high
Yeah.
because it has taken this. Yesterday, this was the confirmed high,
Hmm.
right? This was the confirmed high.
But it wasn't necessarily a tradeaway.
Wasn't a tradeaway exactly because it hasn't taken liquidity, right?
Yes.
But look, it still made a significant push, taking some liquidity. So it can be considered as a tradeaway, but to a certain extent. Remember, there's tradeaways that will develop the price really with a good reaction, and sometimes it's just a pullback.
So then my
Basically,
question
a
is,
tradeaway is take a reaction from liquidity. That's it.
yes. Oh wait, I guess yeah, this took like technically this decisional, so there
Yes.
is valid liquidity
And
here, which
also
makes sense
mitigated
why.
that inducement POI
Uh-huh.
from this FBOS here, this
Hmm.
SMT. So basically, the tradeaway is still valid, but it's just that this was the high and became not the high when this took higher. Because you
Yes.
develop and you update your PA the more and more the time
Just like you
advances.
said, a tradeaway like this inducement can become liquidity in the future,
Yeah, of
which
course, of
basically is
course.
what it did here. Now
Of
my
course, because
question
remember,
is,
the liquidity
sorry.
is built around structure. So if there's a big inducement, it creates a relevant structure. So they will put their stop losses there.
Yes. And now what we see is we come down, we mitigate the inducement POI, also taking, oh my God, I want to,
It's okay. No problem. I understand everything. You can put all those drawings.
yeah.
It's okay.
So then what we do now is we have like this structure, boom, 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 relevant liquidity above here. So we take that into the inducement POI, and then that is why we come down. Is there other liquidity here? Not really. not really, but we come all the way down to, as I see this, break and retest area right here, which
Yeah, but
obviously
it's
have break evens, here.
is it really the break and retest?
That's how I see it. Like, what is it then?
Yeah, but
I don't know how to
then it's
justify it
it's
any other
it's
way.
potentially a higher time from POI. Look
Oh,
look where we at.
yeah. We
Look
have
to the left, going to M15.
this,
No, going to
this.
M15.
Okay.
Let me just erase my shit.
Can I just go on them 30?
Oh yeah, I don't mind.
That'd be better.
And look at those equal lows. Don't move.
Oh, yeah.
Look. See? Inducement. It's always the same thing. So look, this here, that point here. I'm about to draw. This one is the relevant breakup structure of higher time frame stuff, right?
Nice.
Here, just come back, mitigates, makes a new high.
And then I've actually noticed that whenever we close like a wick like this, usually the structure expectation becomes this entire thing. So if we
But
were to
it's
react to
like
higher,
you can view it that way, but really what made this high reverse was the liquidity build here. Like
yeah.
we took this, these are equal highs.
Okay.
And see how magical it is. We're still trading in line with the structural expectation. Look at that M1, that 30-minute candle. It's like it's pretty intense. Going to H1, it's like look at H1 on AUD. H1, look at that candle.
It's just one
It's
big
nasty.
bearish candle.
I'm kind of jealous for the ones that took this trade.
Did you not?
I mean, I'm kind of
Oh yeah,
jealous.
you don't have any count. Yeah, you don't have
Yeah, I
any
mean,
count now.
I don't even have my MT4 open. Today I'm calling because I use a local broker to send money from a wire transfer. I'm sending money today, so I'm gonna be ready for Monday. I make sure
Perfect.
everybody's ready also Monday. It doesn't matter if it's a $10 account, 100 demo, FTMO demo. You do whatever you want. So I hope this answer your question to them.
Yeah, I was gonna say like just the last thing like this. Would this be relevant here? Because the way I saw this was this in like took the decisional here, and this was like an inducement POI in my eyes. But I guess that's not.
No, but remember, has this closed below this? Look at
No.
this. Look at this. When this makes a new high, then it makes a new high. This becomes a protected low.
Okay.
There's really a lot of concepts that are confusing. You have the inducement POI, but you have the protected low, right? These two can be together, and sometimes they cannot be together. In this case, I don't think that this is an inducement POI, but we justify that this is potentially a significant protected low because of that push, that structural shift. Look at this. So let's say that you have this push making this high, right? You could say that, we induce Asia low, right? Then you could justify this as being an inducement POI. But then make a significant high. Never comes back in what, 2 weeks? So the justification of this can be understandable that this is a potential protected low. But look, this one reacts, doesn't make a new high. So most likely this becomes an SMT.
Yeah.
See how your thought process evolves in time. The same thing that when you're working on your coding a software, every single new line develops a new problem. Solving problems in trading is very important.
100%.
So,
okay, that answers my question though.
Thank you. Andres, you're closing the show. Let's go.
Okay. Basically, I was going to talk about GU.
Yeah.
And I think this could fit as an example for that explanation you made from POIs
SMT.
that lies on equal lows.
Yeah.
But basically, what I was going to ask, if it was too aggressive to enter here, I'm just going to change to 1 minute.
Yeah, go on 1 minute.
Price already took all these 1 minute liquidity, but here
I don't think it's too aggressive because in your this point, let's say, in your this point, okay, look at this relevant liquidity. Look at it, boom, 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 right?
Okay.
This here, this new low actually gave the trade away, right? So not the trade away, not trading away. I mean, like actually raising the red flag, right? There's a red flag here. Blah blah blah. Okay, these equal lows pushing lower without liquidity anchored to the left actually gives me okay. This is what I want to be involved with. So I would put an alert here, right? Alert. Now this comes back, fakes again, and goes higher. I don't think this is too aggressive, ignore this point. Based on those equal highs, I don't think this is too aggressive. But remember, I just don't see an entry here. It's not because it's too aggressive. It's there's no entry. Compare this to the quality of AUD USD. How many relevant mitigation points you had in AUD USD? Maybe 4, 5.
Yeah, for sure.
So I think that being aggressive isn't the problem here, is you don't have any valid entries out other than just taking the short. And look, if you would take that whole POI, what's the size of that bad boy? That's going to be pretty, like that's significant when it comes down. If this point would have come here, that would have been a perfect to enter. And
Okay.
we're
Yeah.
in M1. M1 with 6 pips stop loss. Very, very not too much value.
Yeah. Basically, that's what I was expecting, but it never came here.
I remember like being right about the direction but wrong about the trade happens all the time. And this is basically the reason why I started trading more aggressive with banking those small 1 2 3 1 2 4, so I have more. So take those actual small trades to build confidence to enter more trades aggressive. And this is where you guys all discovered me on social media when I started trading very aggressive, but I was always banking that buffer before. I was tired of missing those trades. Some of you guys know me from my previous community, and even some of you knows me from before. Me, Sofiane, and Manolo, back in the day, we used to spend hours, like sometimes 4 hours straight without even taking one single trade. I was tired of this, right? I was tired that price never came back. We were really strict. Well, it was good because we were very, very patient and very diligent when it comes down to the discipline, but it was annoying because I wasn't making any money. So if you want to enter those kind of trades, make sure that you have a buffer.
Okay.
And even
Understood.
if a buffer requires taking a stupid trade, I'm not saying stupid trade, but like example, entering into a bigger stop loss that has a really good potential to do a 1-2-4, let's say. That's a stupid trade in my opinion, but it's good for 4 trades. It's all simple maths. I've shown you in a video, if you respect your maximum stop loss per day and you have a solid risk to reward, and you have a good psychology, it's impossible for you to lose money. It's just simple math, right? If one trade catch you up maybe 1 week of drawdown, then it's okay. The problem is where it goes south is people don't want to respect their plan. They just continuously continue to trade it. And this is why, even though I have a losing day, I really have a losing week because I just respect the same plan every single day, right? It's just very, very simple. But thank you, Andres, on this question.
Thank you, Rod.
All right. So that was it. Let me just stop the recording.